Well, the company in focus is Godrej Properties. What we are actually analyzing is the company actually making a marked shift from its strategy of actually going ahead with the JDA, JV model, or is it going to go ahead and start developing and buying its own land parcels? Now, a couple of strategic moves that the company has also justified in the conference call and in multiple investor presentations. Now what we are tracking is that Godrej Properties, in a recent conference call or in a recent analyst call, said that from a business development perspective, they've added a couple of projects in Kalyan, which almost 1.5 million square feet. Also, they've acquired a well-located land parcel in Sarjapur in Bangalore in October. Again, a very recent development. And also, they have migrated to the Integrated Township Policy from this existing Special Township Policy for Garden City, which is their project in Panvel. So now again, these announcements actually surprised analysts and the market alike, as the company typically has not adopted a land parcel buying policy, rather adopting other methods like the JDA method. The company had earlier too announced the launch of a luxurious residential development at the iconic RK Studios in Chembur. The company has also started the launch of the Collector's Edition 3 and 4 bedroom residences. Even in this project, the company took over the land and even purchased the articles and accessories that were in the studio's possession. Now, analysts and the street that has been giving a very high multiple to Godrej Properties, given the fact that the company had a very lean balance sheet, has now been taken aback by the aggressive stance of buying land parcels that the company has adopted just recently. In fact, this particular move also indicates that the company is willing to go ahead and expand the debt as far as its balance sheet is concerned. CLSA recently wrote a note on the company where they downgraded the stock from an outperform rating to a sell rating and also cut the target price. Now, what the company has said is that the company has consistently scaled up as far as pre-sales and new project acquisitions were concerned. However, they maintained that Godrej Properties, that was commanding a higher PB multiple of 5 times versus just 1 to 2 times that its peers were commanding, is something that is quite overvalued. In fact, the management guided recently for a net debt to equity of 1 time in the next few quarters, and this indicates that the management is willing to take on further debt of close to 2,000 crore rupees. Now, the CLSA says that they are concerned as far as rich valuations are concerned, muted profitability is concerned, and also the likely debt increase. Now, also what they are saying is that the cash flow that the company was enjoying has been quite subdued as far as the past few quarters are concerned, and they believe that the cash flow impacted from low collections and continued construction related costs and higher land and approval related payments. Now, what Pirojsha Godrej said was that the outlook for the current financial year is quite poor, with limited project completion due to the high construction disruption faced as far as the first half of the year is concerned. They expect earnings to normalize in the financial year 2022 and to sharply grow from financial year 2023 onwards. So overall, the stock in focus is Godrej Properties. Interesting shift as far as the focus is concerned.